Welcome to Dave's Daily Crypto Take. Today is Monday, September 6th, 2021. Let's take a look at today's charts. At number one, we got BTC at $51,768.75, up 4.21%. Ethereum at number two, $3,930.15, up 1.74%. Cardano at number three, $2.89, up 1.1%. Binance Coin number four, $500, up 1.73%. Tether at number five, $1, down 0.03%. XRP number six, $1.32, up 6.27%. Solana number seven at $142.21, up 1.75%. Dogecoin at number eight, 31 cents, up 4.27%. Number nine, Polkadot, $34.32, up 6.52%. And last but not least, USD coin number 10, 99 cents. Let's take a look at the crypto fear and greed index. Extreme fear can be a sign that investors are too worried. That could be a buying opportunity. And when investors are getting too greedy, that means the market is due for a correction. So today is extreme greed at 79. Yesterday was greed at 73. Last week was greed at 73. And last month at this time was greed at 69. Let's take a look at the 5 articles for today. Table of contents are number one, Cardano needs this to sustain its rally to $3 and beyond. Article 2, why Bitcoin, Ethereum prices are climbing higher. Article 3, these are the 10 worst performing cryptocurrencies in August. Article 4, a father and son who helps clients find forgotten crypto passwords estimate billions of dollars worth of lost Bitcoin is recoverable. And last but not least, today's main topic is it's settled. Bitcoin is the future. So I'd like to say thank you so much to everyone that's been listening to all of the podcasts and YouTube videos. I know I've been taking a hiatus, but I'm back into full force again. So hopefully that you'll be listening in to a few of the podcasts and also a few of the videos. So do what you can by just liking, sharing, and subscribing, and comment down below and let me know what you want to hear in the month of September. All right, so let's get into it. At number one, Cardano needs this to sustain its rally to $3 and beyond. Cardano is on a roll, and when it comes to successful rallies, and the altcoin has been making substantial gains. Last month, the coin established new all-time highs, and less than 3 days ago, it breached $3. Now that the coin has become the third biggest cryptocurrency, all sights are on it. So amidst this anticipation, will ADA be able to sustain this rise? Cardano hype continues. Within a few days, the world will witness the Cardano Summit 2021 on September 25th to 26th. Cardano has been riding high owing to the hype, but not that has not really helped the price much. Over a fortnight, ADA's price action remained steady, falling merely by 1.65%. This does dispute the single-day changes, and even though the $3 mark was hit 2 days ago, there is some skepticism as to when that could happen again. So even if ADA does breach $3 again, some consolidation between $3 and 20 cents and $2.45 is expected. Now it is important to consider how investors reacted to its $3 breach. Investors remain confused. In the days following fluctuations in the $3 zone, the market also witnessed some bearish behavior from retail investors. Long liquidations were already stronger than short liquidations throughout the month, and now it looked like they were dominating the market. Moreover, there is also a chance that whales could be moving their holdings. This can be inferred from the large transactions worth more than 100K occurring in the market. More than $136.83 billion worth of ADA moved around in the last 3 days. Good news is that any bearish sentiment can be pushed aside considering the high funding rate. Adding to it is the open interest, which is an all-time high. More movement is needed in the spot market still, but volumes won't sustain this rally for long. So there you guys have it. Cardano needs this to sustain its rally to $3 and beyond. What do you guys think about this article? Comment down below and let me know what you think. Article number 2, why crypto and Bitcoin, Ethereum prices are climbing higher. So, by John Dextry on Twitter, he said major crypto tokens are trading at their highest level since May. Bitcoin was changing hands at more than $50,000 on September 4th, an increase of 20% from a month ago. According to CoinDesk data, Ethereum has risen around 40% to more than $3,900 during that span. So the hard part is explaining why prices are so high. Crypto assets tend to be highly volatile, with prices that ping pong around on the latest speculation. Here are some developments that may have given the popular digital tokens a recent boost. Facebook could add features for NFTs to its wallet. Facebook executive David Marcus told Bloomberg in late August that the social network could provide support for non-fungible tokens on its digital wallet known as Novi. Facebook is also developing its own crypto asset known as Diem. NFTs are kind of a digital version of a one-of-a-kind artworks of trading cards typically built on the Ethereum blockchain. If blockchain and if Facebook helps make NFTs more popular, that could drive up demand for Ether, which is used to pay for computations on the Ethereum network. Visa also says it's exploring NFTs. El Salvador will make Bitcoin legal tender on September 7. The Central American nation will become the first country in the world to make the original crypto asset a national currency, alongside the US dollar. Some think this will spur further Bitcoin adoption. The International Monetary Fund, on the other hand, thinks this type of thing could destabilize the economy and expose the government and regular citizens to additional exchange rate risk. Bitcoin mining is bouncing back. Crypto miners who power fleets of energy-intensive computers to process Bitcoin transactions are powering back up after getting banned in China. As a backbone for crypto computing capacity rebounds and is distributed around the world, from Texas to Kazakhstan, some may see this as a sign of robustness for Bitcoin and the broader world of digital assets. Elon Musk still likes crypto. Sometimes it seems like Bitcoin is worth whatever Tesla founder Elon Musk says it is. Crypto hit the skids in May when Musk said the electric car company would stop accepting Bitcoin as payment until it produced more using more sustainable sources of energy. Lately, he's made nice noises about crypto, though, and he pointed out on Twitter that he owns Bitcoin and some other digital assets and would like for them to flourish. The head of the US Securities and Exchange Commission fired a warning shot. Gary Gensler told the Financial Times that crypto executives have to heed regulations if they want to be around in the coming years. He also suggested that so-called DeFi, or decentralized finance based on software that allows users to transact directly with each other, is still rather centralized, and perhaps not that different from the peer-to-peer platforms that sprung up years ago. Last month, the SEC brought charges against two men who sold $30 million of securities using DeFi technology. So there you guys have it. What are the reasons why Bitcoin, Ethereum prices are climbing higher? Comment down below and let me know what you think, why it's going higher, and do you think it's going to sustain it and keep on going in the next month? All right, article number 3. These are the 10 worst performing cryptocurrencies in August. The first half of 2021 has been a breakthrough year for the crypto market. Now, the crypto industry is carrying forward the same performance in the first half of 2021 has been a breakthrough year for the crypto market. Now, the same cryptocurrency is carrying forward the same performance in the second half as well. The market performed well in July as well as in August, and there are a few coins that touched their all-time high in August. As always, there were a few coins that rewarded investors with massive returns that were also these that provided negative or negligible returns last month. Let's take a look at the 10 worst performing cryptocurrencies in August. We have referred to the return data from CoinMarketCap.com to rank the 10 worst performing cryptocurrencies in August. We have considered only the top 100 cryptocurrencies on the basis of the market cap. These are the 10 worst performing cryptocurrencies in August. Number 10, Stacks. Formerly known as Blockstack, was rebranded to Stacks in Q4 2020. Stacks aims to bring smart contracts and decentralized applications, dApps, to Bitcoin. Stacks is trading over $1.50 and has a market cap of more than $1,845 million. It is up more than 250% YTD year to date. Stacks has an all-time high of $2.82 and an all-time low of 0.04 cents. Number 9, Celsius. Launched in 2018, it is a one-stop banking and financial service platform for cryptocurrency users. It allows users to deposit cryptocurrencies as well as offers services such as loans and wallet-style payments. Celsius is trading over $5.90 and has a market cap of more than $1,395 million. It is up more than 6% year to date. Celsius has an all-time high of $8.02 in June 2021 and an all-time low of 2 cents back in October 2018. Number 8, Tether. Launched in 2014, it is a stablecoin that mirrors the price of the US dollar. Its objective is to combine the usefulness of cryptocurrencies with the stable value of the US dollar. Tether is trading at $1 and has a market cap of more than $65,786 million. Tether has an all-time high of $1.21 back in 2017 and an all-time low of 0.0001018 cents, June 2011. All right, Binance USD, launched in 2019. It is a one-to-one USD-backed stablecoin. It's issued by Binance and is approved by regulated by the NYDFS, which is the New York State Department of Financial Services. Binance USD is trading at $1 and has a market cap of more than $12,542 million. Binance USD has an all-time high of $6.29 back in 2021 June and an all-time low of 88 cents in 2020 March. Number 6, DAI. Launched in 2019, it is an Ethereum-based stablecoin whose value is soft pegged to the US dollar and is collateralized by a mix of other cryptocurrencies. DAI is trading at $1 and has a market cap of more than $60,175 million. It is down almost 1% year to date. DAI has an all-time high of $1.14 and an all-time low of 89 cents. Number 5, USD coin. Launched in 2018, it is a stablecoin that is pegged to the US dollar on a one-to-one basis. Transparency is what makes this coin different from others. Users get assurance that they can easily withdraw 1 USDC for $1. USD coin is trading at $1 and has a market cap of more than $27,406 million. It is up almost 1% year to date. USD coin has an all-time high of $1.11 and an all-time low of 92 cents. Number 4, True USD. Launched in 2018, it is a US dollar stablecoin that is pegged to USD at 1-to-1. Like any other stablecoin, this coin also aims to balance stability and utility. True USD is trading at $1 and has a market cap of more than $1,380 million. It is down almost 1% year to date. True USD has an all-time high of $1.36 and an all-time low of 91 cents. Number 3, Terra USD. Launched in 2020, it is a decentralized algorithmic stablecoin of the Terra blockchain and is value pegged to the US dollar. Terra USD is trading at $1 and has a market cap of more than $2,426 million. It is down almost 1% year to date. Terra USD has an all-time high of $1.05 and an all-time low of 79 cents. Number 2, UNBIASED Leo. Launched in 2019, it is a utility token that is usable on the FIAT ecosystem. It basically allows users to save money on trading fees. UNBIASED Leo is presently trading over $2.90 and has a market cap of more than $2,807 million. It is up more than 116% year to date. UNBIASED Leo has an all-time high of $3.92 and an all-time low of 80 cents. And last but not least, number 1, AMP. AMP is a new digital collateral token that offers instant, verifiable assurances for any kind of value transfer. It supports a wide variety of use cases for collateralization. AMP is presently trading over 0.057 cents and has a market cap of more than $2,473 million. It is up more than 780% year to date, and AMP has an all-time high of 12 cents June 2021 and an all-time low of 0.007946% cents November 2020. So there you guys have it. What do you guys think of these are the 10 worst performing cryptocurrencies in August? Comment down below and let me know what you think about it. All right. Before we get into the next topics, I just want to say thank you so much for listening in to the podcast. If you're checking me out on Apple, Spotify, or Google Podcast, give us a rating and let me know what you guys think about the podcast. And if you're on the YouTube space, comment down below and like, share, subscribe to help the channel out. Again, I appreciate all the love. Thank you so much. All right, let's get back into it. Article number 4. A father and son who helps clients find forgotten crypto passwords estimate billions of dollars worth of lost Bitcoin is recoverable. So there are 3 things in this article. Number 1, a father and son team of computer programmers help people find lost passwords to their crypto wallets. 2, Chris and Charlie Brooks conducted an analysis that led them to estimate between 68,110,000 and 92,855 seemingly lost Bitcoins are recoverable. At current prices, the high end of the recoverable Bitcoin estimates amounts to $4.7 billion. For Chris and Charlie Brooks, finding lost passwords to cryptocurrency wallets requires figuring out how their clients' minds work. And that effort can help their customers retrieve a slice of what the pair estimates is about $4.7 billion worth of recoverable Bitcoin stranded in locked wallets. We get a really broad spectrum of clients. We have a client who's an early stage miner in Bitcoin who lost all of his information and he knows he's got some Bitcoin somewhere. We get clients who were told in 2017 to buy into the hype bubble and they bought $1,000 worth and they're looking for something to cover the rent. Charlie, a 20-year-old computer programmer who joined his father in running crypto asset recovery based in New Hampshire, told Insider in a video interview, "One of our most recent cracks had about $250,000 in a blockchain wallet," said Charlie, who majored in computer science in college. He put school aside for now to work at the business. "This is something I've always liked. I would follow along with my dad and online treasure hunting. It seemed really cool." Nearly 40% of 1,000 US crypto owners in a recent survey from Crypto Advantage said they had lost wallet passwords, and on average, those unable to find their passwords lost $2,134. The jumping off point, the duo's estimate of what can be recovered, has a chain analysis estimate that up to 20% of 18.5 million existing Bitcoin appear to be lost or stranded in locked wallets. The figures were cited in January by the New York Times in a story about a San Francisco-based programmer who couldn't find the password to the hard drive that stored his 7,002 Bitcoin. After 8 wrong guesses, he had 2 left to figure out what the password before the virtual currency was likely lost forever. The chain analysis figure sparked a question for the Brookses. Yes, that Bitcoin is lost, but if the owner of that Bitcoin were motivated, what percentage of those do we think is reasonable to assume could be recovered? Said Chris, a 50-year-old computer programmer who started his business in 2017, and after some time retooling, ramped up operations late last year when his son came on board. Nakamoto's forum. To find a sample of lost Bitcoin for their analysis, Chris said that he turned to a thread on Bitcoin Talk, a forum whose creation is credited to Bitcoin inventor Satoshi Nakamoto. A thread started in 2011 called "Let's Add Up the Known Lost Bitcoin" is filled with posts by people with the amount of Bitcoin they lost and how it happened. The Brookses filtered and set parameters for information, such as excluding losses of less than half of Bitcoin to make an estimate on the sample population of the Bitcoin reported lost. The Brookses narrowed it all down to 72 posts that described the loss of at least half of Bitcoin. They determined that 14% are potential recoverable cases and that from their own work in recovering wallets for clients, they can decrypt about 35% of passwords. That led to their conclusion that about 2.45% they can decrypt of lost Bitcoin is retrievable, with a range between 68,110 and 92,855 Bitcoins. That would make up to about $4.7 billion in Bitcoin recoverable based on the asset's price of about $50,372 on Friday. So, are they good guesses? We get as good as a list of passwords as we can from a client, and then we put our heads together and spend some time extrapolating the way they make their passwords and try to get in their mind when they are actually creating a password, said Charlie. That's the most helpful thing, just seeing their practice, he said. That's the cornerstone of our business, essentially. The duo will run hundreds of millions or billions of variations of password patterns and test those against the encrypted version of the wallet, said Chris. If you don't have a very good password guess, there are more possible passwords that there are atoms in the universe. And I'm not being facetious when I say that, said Chris. The Brookses said decrypting times vary, but occasionally can take as little as 5 seconds. That happened with a client whose list of 9 potential passwords contained the correct one. Charlie said that they worked for roughly a month and a half with a client who turned out to have more than $250,000 in his wallet. Security measures they take include having clients sign a contract stating they are the owner of the blockchain wallet being worked on. The two get paid on a sliding scale, starting with the wallets containing between 0 and 10 Bitcoins, or an equivalent value. The team will earn a 20% commission. There's no charge to clients if they can't recover any funds. Chris said a number of their clients live in countries where people are largely unbanked. They may have a wallet with a couple of hundreds of dollars in it, and that is their life savings. If they lose the password to it, they have no access to it anymore, said Chris. In some sense, it can be a heartbreaking piece of the business. We do crack some of the wallets. It's a balancing act to be helpful without going too far down a rabbit hole. So there you guys have it, a father and son who helps clients find forgotten crypto passwords, estimate billions of dollars worth of lost Bitcoin is recoverable. What do you guys think about this story? Do you think the father and son team have a thing going on? Or do you think that, hey, once you lose your password, that's it? Comment down below. Let me know what you think. All right. Last one for today. Main topic is it's settled. Bitcoin is the future. So 2 points in this article. Number one, Bitcoin has won the battle of currencies, fiat or digital. And two, various characteristics of BTC make it a superior asset in the human history. Well, Bitcoin has been a unique asset in the annals of the world's financial history. A highly secure, rare, decentralized, valuable, and transportable asset. It's highly accessible, that safe haven gold. It gives much more high returns in real estate, and unlike stocks and shares, its supply is not subject to change abruptly. It even competes with giants like Visa on speed and cost. The popularity of cryptocurrency is exploding. It has a bigger user base than the internet did in the 1990s. It's worth more than $900 billion. It already poses a catastrophic risk to the global economy, yet naysayers keep peddling lies about BTC. Everyone knows how operating a railway line is always greener than driving a car. What would happen if the entire energy usage of creating a completely operational and interconnected railway? History shows that how railway networks are built over decades and with hundreds of billions of dollars in order to transport people at a low cost. Yes, think of Bitcoin as a cyberspace railway. Bitcoin is pure energy in motion. The amount of energy required to build this enormous, safe, decentralized, and redundant network is staggering. When it's finished, and it'll be pretty much there now, anybody can send cash to anybody else in the world for almost no cost. The transaction is completed and validated on the Bitcoin blockchain, which acts as a global financial ledger without the need for intermediaries. There are no more fees to pay when sending Bitcoins across borders. Instead, you're paying a fee to use an intermediary service that will strip your IP address from each transaction's metadata. Bitcoin revolution has unleashed the Earth's hidden energy potential. Everything is either physical or energetic. Humans require energy to live. We've always been converting one form of energy into another. Take electricity as an example. The limit to transport electricity is usually 500 miles, a difficult constraint. With growth in human population, cities grew and they needed more electricity. Therefore, power stations were built to meet electricity requirements. So much energy was utilized to make it happen. Similarly, there's an endless energy stored in seas, oceans, deserts, forests, etc. A lot of trapped energy in hospitable regions still lies untapped. What if there's a way to use this kinetic energy and convert it to power? And since it is in a hospitable terrain with no use for humans, what if that electricity could power a Bitcoin mining rig? You're now converted natural, sustainable energy into a financial instrument, multiplier by a billion. There are about a billion places on the planet where we can neglect it to look because they are too far away. A completely decentralized, inconspicuous, and replenishable network of Bitcoin rigs humming away to construct a safe and independent asset infrastructure. Mother Nature provides the power. Because no one resides there, we don't require this energy to be supplied into our homes. What about instead using it to mine Bitcoin? However, in reality, more energy does not equal more Bitcoin. It isn't true that more gold would be available if we get paid for it. Isn't it how the gold rush worked? You can't because the difficulty adjustment is beautiful. Unlike fiat money, which can be generated from thin, the first law of thermodynamics, which states that energy can't be created or destroyed, is correct. Fiat money violates the first law of thermodynamics, making it fraudulent. The number of Bitcoins that may be mined is limited to 21 million. You earn Bitcoin when you contribute to the network. You can only mine a specific number of Bitcoin in each cycle, and the amount is being reduced every 4 years. The Bitcoin algorithm adjusts difficulty to make it more difficult to mine the fixed quantity of Bitcoin as more and more miners enter the digital gold rush with their supercomputing hardware. When China banned Bitcoin mining a few months ago, approximately half of the Bitcoin mining network collapsed. The difficulty was automatically adjusted to make it simpler for the remaining miners to mine Bitcoin. So here's the thing. You can't always control what people do, but you can use your influence to drive demand for a service or product, and it works without fail. Now, let me explain how we did it. Do you believe Google would have any problems if 50% of its computing power were turned off at once? Well, Bitcoin is the world's most secure computer network. Bitcoin is now 12 years old. There has never been a successful cryptocurrency hack. That's because of decentralization and redundancy characteristics. Every Bitcoin node has a copy of the blockchain, which is replicated by all other nodes. As a result, if you want to modify or tamper with the blockchain, you'll need to gain consent for more than half of the entire global Bitcoin mining network. Since they won't agree, it simply won't happen. So, why should you worry about your Bitcoin being rejected when it arrives to the receiver's wallet? Well, the answer is that mining not only generates more Bitcoin, it also secures the network by decentralizing and redundancy. As a result, miners are incentivized to mine Bitcoin while simultaneously benefiting every Bitcoiner. You can't shut down Facebook unless you contact Zuckerberg. Who do you call to turn off Bitcoin? That's correct. Nobody or everyone. In the next several days, I'll rebunk and debunk a lot more FUD. This was just a sample of what's to come. It's a never-ending cycle and never-ending rabbit hole that has roots in economics, ecology, network theory, computer science, mathematics, cybersecurity, and game theory. The more you delve into it, the more you'll uncover. It's a $1 trillion treasure trove that the majority of the world doesn't have access to. You can, though. So, what do you guys think about this? It's settled. Bitcoin is the future. Do you believe that this is a true case in 2021? Do you think that we are ready, society and the world is ready to uncover and adopt it for likes of fiat or gold or other such assets? Bitcoin is the future. Comment down below and let me know what you think. All right, so that sums it up, everyone. Let's take a look at the prices one more time before we head out. Number one, BTC is at $51,768. Ethereum, $3,930. Cardano, $2.91. Binance Coin, $502. Tether, $1. XRP, $1.33. Solana, $142. Dogecoin, 31 cents. Polkadot, $34, and USD coin, 99 cents. All right, so there you guys have it. Thank you so much for taking it this far into the podcast and YouTube video. Again, do what you can by sharing, subscribing, and give us a rating on the podcast, whether you're listening on Apple, Spotify, or Google. There you guys have it. Thanks again for listening in to Dave's Daily Crypto Take, and I'll see you guys in the next one. Have a great crypto day. Peace.